You know, I honestly don't know how market watcher Joe Fahmy is going to top what he did in 2016 and 2017, because not only did Joe predict Donald Trump would win the election, everyone thought he was crazy, but that the Dow would top 20,000, and that we would be looking at the markets we're looking at. So I don't know what he's drinking, but I want some of it. Joe Fahmy joins us right now. Good to have you, my friend. Thanks for coming.
Hey, thanks for having me, Neil. Appreciate it.
All right, now, just in the middle of this bullish series of developments, we have this, I don't know what you call it, black swan event, Joe, with the Chinese and seizing drones and all that. It might not escalate. Then again, it might. Does that worry you going into 2017, that we've been so focused on Russia and what they're doing that we haven't paid enough attention to China and what they're saying?
No, I mean, we've had a lot of geopolitical events over the past 3 to 5 years that there's always a knee-jerk reaction, but at the end of the day, the market just gets gobbled up, sentiment gets negative quickly, and we rebound pretty well. And you've looked back through the last 3 to 5 years, you know, especially if you consider where we've come from, 1,000, 1,500 points in the Dow in the past 6 weeks.
Too much, though? Do you think just in the last 5 or so weeks, Joe, it's a little bit, you know, you saw it, God bless you, but I mean that it's too much, nothing goes straight up, you know?
Short term for sure. However, go back and look at the past 12 to 18 months. The market hasn't really gone anywhere.
True.
So we are just, that's why, you know, a lot of people say, great, you made a call for 20,000 back in April, and they ask me now what's next. I feel we're just starting a new bull market.
Really?
And we've been in a consolidation for 12 to 18 months. And although the S&P didn't correct by the official definition, which personally I think is stupid, of 20%, when you look beneath the surface, financials got smoked 30%, energy 50%, biotech 40%, and small and mid caps 25 to 30%. So we really, beneath the surface, have been in a bear market, and we are just starting to emerge. Now, do I think it goes straight up? Of course not. Are we going to have corrections and pullbacks and shakeouts along the way? Absolutely. However, since I feel a lot of the technicals and improving fundamentals are coming up going forward, I feel that we're just starting a new bull market.
All right, where does it take us?
I mean, target-wise, I don't know. Over the next 1 to 2 years, I think if GDP can shift from 1.5 to, let's say, 3%. I know Steve Mnuchin has mentioned 4% GDP, which I think is too aggressive.
Right,
but
talking
even
about
if you,
the Treasury Secretary designate, but go ahead.
Correct, yeah. If you, I mean, that's their targets for 4%, but even if you can move 1.5 to 2 up to 3, 3.5, that has a tremendous impact on the economy. And part of my call for back in April when the Dow was 17.5, a big portion of that call was sentiment, meaning that a lot of people, both retail and professionals that I highly respect, were very negative on the market back then. And not too long ago, the sentiment was near 5-year lows. In other words, everyone was expecting a correction. That sentiment, although it's improved recently, will continue with that one foot out the door mentality. So every time it looks like we're going to go into a correction, the market tends to fool the majority, and I feel that the dips will just continue to get bought up.
All right, so let's say if it's 20,000 now, or, you know, we're teasing this, I mean, 21, 22, what are you looking at?
Yeah, I could see a double-digit gain next year. I mean, of course, with corrections along the way.
A double-digit gain would be 2,000 points, you know?
Yeah, I mean, at least, you know, and I'm thinking longer term, since this is the beginning of a new bull market, we're looking at...
You wouldn't be concerned that it's pricey? I know the theory that, you know, as the economy picks up, earnings pick up, all of a sudden multiples are adjusted, and what once looked pricey suddenly isn't. But you're not worried?
I mean, the Dow's trading 16 times earnings. I don't think that's pricey. Yeah. We're still in a low interest rate environment, although the Fed is going to be increasing rates. They said they're going to do it gradually. So I still think we're in a favorable global environment where all the Feds worldwide are keeping interest rates low.
Well, will Donald Trump be a market-friendly president? Will his policies, the tax cuts he's talked about, the cut regulations he's talked about, overhauling health care he's talked about, market-friendly?
Yeah, for sure. And I think you've heard a lot of CEOs say that.
Yeah.
And also, you know, in anticipation, it's not just regulations in the financial sector, it's regulations overall and, you know, tax code, repatriation, and so forth. You've heard a lot of CEOs in different industries a little bit more positive. And I do believe, yes, it will be a business-friendly environment.
All right, Joe. Very good seeing you. Thank you for taking the time.
Hey, thanks for having me. Appreciate it.
Joe Fahmy.